Hey everyone, Jim Fitzpatrick. Thanks so much for joining us this morning on CBT Now, right here at CBT Automotive Network. On today's show, we are diving into the Kerrigan Dealer Survey with Erin Kerrigan, the founder and managing director of Kerrigan Advisors. Thanks so much for joining us, Erin, on the show today.
Happy to be here, Jim. Happy New Year.
Yeah, Happy New Year to you as well. So let's dive into this. How did you conduct the 2024 Kerrigan Dealer Survey, and how many respondents did you get?
So this is our sixth annual dealer survey, and we
Wow.
started it very fortunately, serendipitously before the pandemic. So in 2019 was the first survey, and it's been very interesting to compare our data from that time to obviously pandemic
Yeah,
periods and then post-pandemic periods.
sure.
And the way we conduct it is we collect the data in conjunction with the distribution of our Blue Sky report.
Hmm.
So when dealers get the Blue Sky report, they have a survey to fill out before they open the report effectively. And that's resulted in a really great response. We have over 600 dealers,
Wow.
and these are individual dealers. These aren't dealerships. It probably represents probably, I would venture to guess 10,000 dealerships or
Wow.
more.
Yeah, that's a great response.
Because it's a dealers,
Yeah.
and we really exclusively interview the dealers with this survey,
Hmm.
and every year we will tweak it a little bit with questions that are more geared to the current issues that dealers are facing.
Yeah. Yeah. That's fantastic. So, what surprised you the most about this year's results?
So this year's results, I think one interesting piece was just in black and white. We asked dealers for each segment of their business, which segment did they think would contribute positively or negatively to their profits in 2025? And 68% of dealers that responded said that EVs would contribute negatively to their profits this year.
Wow. Interesting.
And that's pretty extreme. By contrast, interestingly, over 70% thought that hybrids would be very positive to their profits.
Hmm.
So very diverse responses in terms of those two products. Also, dealers thought that their sales and service would be over 70% would contribute positively to their earnings. In fact, when you look at the legacy business of the industry, all of those different business streams, 50% or more of dealers said they'd be positive. So really the only dark spot
Hmm.
what were the EVs. And it'll be interesting to see what happens with the new administration, because this survey was completed before the election results.
Okay. Okay. Interesting. Interesting. So, what are dealers' views on acquisitions? Are most growing?
So about 50% of dealers surveyed are looking to expand. That's pretty interesting. What we also saw is that really the dealers either were looking to expand or looking to sell, and the number that were looking to just steady state, not change anything, continues to decline. And we think that's really indicative of an industry that is consolidating. So we're seeing dealers much more than before the pandemic
Yeah.
saying, I either need to have a very strategic plan to grow my enterprise sizably, usually within my region. So owning more of my market, not necessarily moving to new markets, but at least really, really capturing more and more market share within my
Sure.
existing market. Or I need to start planning my exit. And so I thought that was a very interesting result.
Yeah, for sure. How about valuation? What?
So valuation was also quite interesting. 68% of dealers were surveyed believe that valuations will either stay the same or increase. So that's very positive.
Yeah, sure
The
is.
flip very positive. You
Yeah.
what wouldn't you want that? How could that be much better? It couldn't really be that much better.
Right.
However, 32% of dealers think that valuations will decline, and that is the highest level we've seen even before the pandemic.
Mm,
So
interesting.
that's pretty interesting also.
Yeah.
And I think it speaks to the changes we are seeing within the franchises. So during the pandemic, the craziness of the limited supply and the demand lifted all boats. So every franchise saw their profits and their values increase.
Right.
Now what we're seeing is a pretty big divergence where we have some franchises that continue to see their valuations grow. We have some franchises that are just staying at this really strong valuation. And then probably about 32% of franchises that are seeing their values decline. Okay. So I do think it's indicative of the broader market that we are seeing maybe about a third of the franchises see their valuations decline.
Okay. And which franchises performed best in the survey?
So this will be of no surprise to anyone.
Here it comes. We can write them down. I'll just write them down. Right.
They were the darlings. Almost 50% of dealers want to add a Toyota store to their group.
I'm surprised the number's only 50.
I know. Well, it's affordability, right?
Yeah.
It's expensive. So I think dealers are pragmatists as well. So about 45% to 50% are looking to add. Now, I think the most impressive result as it relates to Toyota and Lexus, 83% of dealers surveyed. And keep in mind, you don't have to own a Toyota store to respond about all the franchises. So we're really taking a broad 600 dealers are just opining on their views on franchise. 83% have a high level of trust in Toyota. Wow. Not like, because we asked high, medium, no.
Sure.
Now, the other franchises that did quite well, Honda did not do very well in our survey in 2023. Our 2024 survey improved greatly. In fact, they were the most improved.
Wow.
Valuation expectations, they went up 11 percentage points.
Wow.
And so that was a big improvement. They are now ranked number 3 in terms of expectations of valuation increase. Now, we still have the issue, of course, out there with their Sony link up, what they're going to do in this direct to consumer, which they've announced. So we'll see how that impacts. Plus, the Nissan merger is just announced. But for now, when we did this survey, they improved greatly. So that, and also I think that speaks to the improved inventories. As you recall, Honda had a real inventory problem. Yeah. It's been corrected. That's
great.
Those two did great. And then the last one I would say, most improved was Ford.
Really? Okay.
Yeah. Yes. Ford was ranked the least trusted franchise in the 2023 survey.
Ouch.
And that was the year we asked this question. But that was really unfortunate. And 48% of dealers surveyed in 2023 had no trust in Ford.
Wow.
That improved 11 percentage points in this year's survey.
Okay.
So kudos to Ford's management.
Yeah.
They reversed themselves on their EV strategy.
I was going to say, I think the EV push hurt a lot of dealers, and they were offended by the whole, you're not going to sell EVs unless you adhere to these 6 pillars. And I think a lot of dealers are put off by that in a big way.
100%. Yeah. And as we now know, the EV market, while very robust in the fourth quarter, most likely because the tax credits disappearing, it has been a very challenging market, and was not the consumer was not quite ready for what the strategy the OEMs were pursuing, as evident with the results. So Ford did very well, and it was great to see them improve in this year's.
So I can probably write these 2 names down that I know for sure will be on this list, but which ones performed the weakest?
So unfortunately. Stellantis really did incredibly poorly. I mean, sort of eye-poppingly poorly in this survey. In fact, we've only asked the trust question twice, but over 70% of dealers surveyed have zero trust in Stellantis as a franchise. And that's important to note, because when you have no trust, that means when you're trying to buy something, trying to project your future earnings, if you don't have any trust in the OEM, it's really hard to guess what's
Yeah,
happen,
that's
right?
right. That's right.
So
Yep.
there is a direct correlation between trust and value.
Yeah.
And so with Stellantis, they also had over 70% of dealers surveyed expect the valuation of Stellantis franchises to decline. And unfortunately, we have seen that
Yeah.
in the buy sell
Right.
market
Right.
as well.
Though,
And
when you think about that, when they've got such great brands as Jeep, and they've got, Ram trucks and such, and I don't know how you feel about it, but if I could steal a Stellantis store, I might be prone to do that, even in light of everything, because I think those brands will make it through, and we might have a conversation 5 years from now that says, "Wow, what a return on investment that was." Am I crazy
I
thinking
think
that?
that I agree with you. I think that Stellantis isn't going away. Jeep's amazing, and
Yeah.
my guess is it's a pretty interesting time to buy a lot of Stellantis stores.
Yeah.
And it really was a management issue. We now have new management,
Right.
and so I do think it could be an opportune time to be an opportunistic buyer of
Sure.
these franchises
Sure.
because they have nowhere to go but up.
Yeah,
I would
that's right.
sure.
That's right. How did Nissan fare in this? Were they just above the Stellantis, or
They were just slightly above.
just above?
They 64% of dealers surveyed expect the Nissan franchise to decline in value in 2025.
Yeah.
That's a 23 percentage point increase from 2023. So that's a pretty big decline. I
Yeah.
mean,
Yeah.
and likewise, their trust level was 58% of dealers had no trust in Nissan.
Yeah.
Now, the merger announcement, and if that does go through,
Yeah.
then perhaps Nissan, likewise, it's a very interesting time to buy Nissan franchises as well.
Yeah.
So there's always opportunity.
Sure.
And I do think, to that point, I think this is pretty interesting. In our Q3 Blue Sky report, the franchises with the highest market share for their respective segments,
Mm-hmm.
meaning the buy sell market share,
Mm-hmm.
Stellantis had the most buy sells of the domestics.
Really?
Nissan had the most buy sells of the imports, and Infiniti had the most buy sells of the luxury franchises. And what that says is that there's a market for those franchises.
That's right.
Because someone's buying them.
That's right.
Obviously, a lot of folks are divesting of them
Yeah.
because they don't want them.
Sure.
But for a transaction to occur, there's got to be a willing buyer on the other side. So I do think it's an interesting play for sure.
Yeah, for sure.
In the marketplace. I did have one other highlight in the report that you probably weren't thinking of, and that is Hyundai. Hyundai actually did not perform as well this year as it did last year. Last year it was ranked number 2, right behind Kia.
Yeah.
For expected value improvement,
Yeah.
Valuation increase. This year it dropped to 7, so that was a big decline. And 28% of dealers expect Hyundai's value to decline in 2025, and also 28% have no trust in the franchise.
Really?
And which is interesting because it's actually double that of Kia is much more has remained very strong, whereas Hyundai is dropping down, and I think that's mostly because of some of the facility requirements that Hyundai is putting upon their dealers, as well as they're very much focused on fewer larger dealers and dealers owning a region, and so when a buy sell comes up, they really want to make sure the dealer they want is in place, which they have the legal right to do when there's a ROFR right in a state. But I do think that's having an impact on valuation, and so that's again, they're still doing well. Obviously, sales wise, they're doing very well.
Yeah.
But we have seen a rise in some negative outlook on that franchise.
Very, very interesting. Yeah, because they've been getting such great press, as you know, over the last few years, and so that's surprising. But so, what does all of this say to you about the 2025 buy-sell market and valuations in general?
So I think it's going to be a very active buy-sell market for 2025, and I say that in that, again, your first question was where where are dealers' thoughts on acquisitions? Well, with this new administration being so much more pro-business,
Yeah.
I saw a marked shift in the
Really?
major consolidators' view on growth.
Wow.
And so I do think there's going to be tremendous buyer demand. Interest rates have come down, so acquisition financing is more attractive.
Yep.
So I do think you're going to see a lot of acquisition demand, and I think you're going to see supply on the other side, because dealers that don't necessarily want to double down or don't want to build that new facility, which are these facilities demands by the OEMs.
I know.
Are consistent.
Right.
In fact, there was just an article about it and we wrote about it in our Blue Sky report, that we are seeing dealers sell because they just don't want to pour all the cash they earned during the pandemic back into a building. They don't want to do this.
And the OEMs know that. The OEMs know that the dealers are cash rich. They're like, oh, a good time to put up a new prototype, right? It's crazy.
Yes. So I do think it's going to be a very active year. And I do think that this survey really speaks to that, the results of this survey.
Yeah. Wow. That's fantastic. Well, I know a lot of dealers are awaiting the survey to see it, and they get a lot out of it. So thank you so much. Erin Kerrigan, the founder and managing director of Kerrigan Advisors. Thank you so much for joining us on the show. Very much appreciate it.
Thank you, Jim.
Thanks.